Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you guys this morning for this last webinar of the week, looking at some interesting price action. Good to be with you guys. Eileen, Minho, Permendra, Kyle, Hussein, Farouk. Got a good group today. So before we get started, quickly, we did get the release of the U.S. import prices. Came in slightly better than expected. We were looking for negative 1.3. We got negative 1.2. Year on year, we're looking negative 8.4%. That came in at negative 8.2%. Continuing jobless claims slightly topping estimates. Looks like 263 versus 210. So long story short, looking at the dollar index to get started here and where the relative performance of the greenback has been, still looking at this thing sliding higher. If you remember, quick look, relative performance so far does have the dollar strong against most of its major counterparts. Biggest loser on the session, Kiwi. We'll take a look at that for sure. Also implications for the Euro key trade that we've been following. Euro top performer, up 0.15% so far on this session. All right, so we'll jump into the price action, guys. If you have any questions or trade setups you'd like to review, please feel free to throw them on the message board. It's been a little bit of a tricky market these last couple of sessions with a lot of these turns sort of holding ranges. You saw the Euro crosses specifically that we've been focused on. Euro Kiwi broke the highs. Euro Pound broke the highs. You saw Euro Dollar and Euro Aussie hold the weekly highs. So a little bit of a divergence there. We'll also take a look at the yen crosses, Aussie yen, Kiwi yen, sterling Kiwi, all on the docket for today as well. Biggest event risk is still on tap, and that's tomorrow with the U.S. retail sales print, guys. It's really going to be a gauge of consumer spending is what the Fed will be looking for, and specifically on the back of, the expectation that we will be seeing further rate increases this year and what's been going on in Europe. China or the broader Asia Pacific region. It's going to be interesting to see if they're actually able to move on rates again. But retail sales are expected to come in, advanced read, negative 0.1%. We're expecting a slightly softer print. Here's what the outlook looks like for tomorrow. Month on month should be at 0.2. It's a little slide from the 0.4 we got the previous month. Core retail sales, ex auto and gas, is also expected to come in slightly softer at 0.4%. So that is on tap for tomorrow. University of Michigan, we're not going to put too much emphasis on this tomorrow as it's just a preliminary read for January. We'll be getting 2 more updates on that. As far as the equity board is concerned, here's what U.S. equities look like, or broader equity markets look like so far in this session. You had a pretty dismal day in Asia Pac. Although China did close higher in the session, both the Shanghai and Shenzhen composites going in the black into the close of the day. You did say Nikkei 225 down 2.68%. That's pressing a pretty big support range. We talked about that earlier in the week on the webinar. We'll take another look today. As you look at equity markets in Europe, also heavier across the board by about 2%. DAX down 2.2%, one of the biggest losers on the session, along with the CAC 40 from France down 2.21. U.S. equity futures also are looking a little bit different. You have a positive open here for the Dow, up 68 points, 7 handles on the S&P, 6.5 on NASDAQ. So mixed start for sure for risk appetite heading into the U.S. session. The data today, again, slightly beating expectations. Looking at the dollar index from this point forward, the major key area that we talked about, guys, that we needed to clear, we closed above earlier in the week. And that was right here at 12,204, 12,194. Remember, I talked about this at length. It held for 3 months or into the 3rd month here, closed above it. Not really getting much conviction thrust. Still like that 12,250 as near-term resistance for the index. It's 100% extension from the advance off the December lows. You also have a median line right here off of those same lows, coinciding nicely with the highs we've been making over the last few days. If we take this median line formation, guys, that we were working off of from the August low, lower median line parallel, it's been kind of messy, but also coincides very nicely with the slope of the advance we've been making. So looking for near-term resistance here, a breach above 1250. There's really nothing until 12,319. So such a scenario, you're looking for some extreme dollar strength. As it stands right now, longs near term, just below 12,250 are at risk. Here's what it looks like on the 30-minute. We've been just in this holding consolidation pattern right below that key resistance at 12,250. I really thought we were going to see that hit yesterday. We didn't. and you're seeing this consolidation here. So interim support right at last week's high, 12,219. You'd need to get back below 12,204 to validate the reversal. Okay, otherwise we're still constructive above 12,204. Hey, Mike, Aussie Kiwi broken out. Time to go long. Okay, let me write that down. We'll definitely take a look at Aussie Key. And Chris says, good morning, Mike. So I take it that you didn't win the Powerball. Actually, you know what? I'm in a couple of pools. I haven't even checked with those guys, but I haven't gotten any phone calls. So I'm going to assume that we haven't, we didn't hit. Minho says, Dax, Footsie, if you have time, please. Sure will. Sure will. Footsie 100. All right. As always, guys, feel free if there are anything you're looking at. We'll be more than happy to take a look. Any questions on the dollar index before we move off? Look for support near 12,204. That's what's going to be the invalidation level. On its face value, again, basic trendline resistance extending off the highs from November. Do keep the focus higher while above this region. So if you get a correction, a possible area of some long exposure for the greenback. And also the bullish invalidation level. Okay, let's jump into yesterday's report, and we'll take a quick look at the pairs we've been looking at earlier in the week, and then we'll jump into your questions. First things first, Euro Kiwi. If you guys recall, this was a trade that we executed both on the long and the short side early in the week. If you remember the report from the 10th, we had highlighted the fact that this had come into a major key resistance region. Okay, that resistance region was defined by 167.47 to 168.41. It's a little bit of a larger ATR, but this is a pair that puts in over 200 pips a day. So the immediate risk was for a downside move against 68.41, targets at 65.90, 64.39, 63.11, and even 61.86. We've made quite a run so far. Here's what Euro Kiwi looks like right now. So on the back of that run, we came as low as 164.30 right here. 163.11, we just missed, which would have been right down here before this thing turned over and ripped through. Now, on the reversal here, what I wanted to point out, and I noted in the report yesterday, guys, was there's a couple of things to look at. First of all, really clear RSI divergence. These are your best divergence signals, where they're inside of the extreme. They're not over here sub 30. They're not over here above 70. You're seeing price action make a lower low. Again, we're only looking at the close. Right? Lower low, the oscillator making a higher low. Now that in and of itself, and I always tell you guys, is not a trigger. You can see divergence keep going for weeks before it actually pans out into a directional shift. But when you get a divergence into a trigger break, 9 times out of 10, that's a trade I will take. And this is a 3-point trigger break, means you have 3 points of reference that have tagged this and failed. Divergence into the break with price at support was a really nice play to the upside. Now, the conviction for the longs didn't happen until you broke this and the bear flag pattern or the bull flag pattern finally giving out. Longs, again, you'd be cleaning up, closing positions up here into that key resistance. And last night, in early London trade, you saw that break right through. So as it stands right now, I'm still kind of cautious on trying to get long from here. I think you get a decent pullback that allows you to get a better position for the long side. Just as we were talking about, the same exact setup, here you have on the opposite side. Price action making a higher high. The oscillator making a lower high. Okay, and that, again, puts the risk for a near-term correction if we break this trigger. Sorry about that, guys. A little bit of a lag here. All right. So sort of the path is set here. On a downside break, you would need to get back below 68.40. We would only be looking to play the pullback. Okay. This is constructive while above 67.50 near term. The only thing I just wanted to highlight again is that median line off the lows is sort of what we just probed into. Okay. So if we look at this median line right here, off the lows from December, it caught that rally early in the week. Secondary break here, breaking the opening range high for the week, which shifts the focus higher, now coming into resistance right at that same region. So again, you could see some pullback from here. You'd be looking for long triggers on such a scenario. The only thing that would invalidate the broader shift in the uptrend, we're going to bring up that the bullish invalidation level, excuse me, up to right here. Okay, while above 64.35 will continue to favor the long side of the trade. Any questions on Euro Key? Here's what the daily looks like, by the way. So again, that key resistance range that we opened up the week spiking right into and pulling off, this is what I'll be looking for today specifically. Okay, this was the first sub 40 break that you got in price from overbought conditions since, geez, you got to go back quite some time since back here. Okay, this is the first from overbought to sub 40. This was the first time you saw that, and that was still right in the middle of the major decline that took you into the lows for 2015. So here we are again, above into overbought. This is your first sub 40 print. So if the downtrend was going to remain intact, you'd want to see 60 hold resistance. We're not. And if price closes above 68.40 and the momentum oscillator is able to close above the 60 threshold, for me, that would keep the trade rather constructive here on Euro Key. Okay, not to mention, when we looked at the relative performance, you got the Euro, one of the higher performers today, 0.17% on the upside. Kiwi, one of the worst performers on the day. So the pair performing as expected here alongside this formation. All right. Looking for long triggers on this pullback. We'll see if we can get some decent play. You know what? I apologize, guys. We're going to bring that bullish invalidation level higher. I think this is where we had it last night, 65.20. Basic trendline support off last week's low and the 2016 low. And then a really big pivot at 65.20. It's just been a clear pivot in price. It's not a fib level. It's not a moving average. But if you scroll back here, you can see real nice reflection right off that region. Where will you be looking for a long trigger and stops if it plays out in Euro Kiwi, asks Eileen. So ideally, Eileen, you'd get a pull back towards like 67.47 or deeper, and then a long trigger ahead of that Asia or ahead of that European low right here at 66.78. So if you get a deeper pull here, momentum bottoms out at 40 and a long trigger pans out against this stop right here would be a beautiful play back into 68.50. And then again, that confluence region. We were looking for a stretch up into here. We actually probed way up into it when 70.26 was the high, or 25 was the high here. So we already took that target out. But again, with the median line there, we'll make that our sort of primary target on another long exposure. A breach above that, and there's a lot of room. There's a lot of room to the upside. Okay, you're looking at soft targets at 171. The 50% retracement of the entire decline doesn't even come in until 71.68. And then you have a 1618 off the low at 73.10. So there's a lot of room to the upside, Eileen. I'd be looking initially for entries near here against that European low. If we get deeper, we're going to have to see if we can get a bounce, a rally, and then another low to take a trade against the previous low. The point being, guys, we always need to make sure that the stop is against a session high, a session low, a major key resistance, or a support level. Okay, we don't want to get into a trade saying, I'm looking for 54 pips. I'm going to put a 54 pip stop and hope I get it. We don't trade like that, right? The stop needs to have meaningful technical significance, meaning a weekly high, a weekly low, a session high, a session low, um, a major fib level, a major confluence resistance, something like that. Eileen, does that make sense? And Eileen says, okay, and the RSI will create a trigger too. Thanks. Yeah, absolutely. So we won't necessarily be looking at the 30-minute for that, right, Eileen? We want to take a little bit deeper of a look. Let me get my, give me one sec. Let me get my platform open, see if we can see the 5 minutes here. Yes, makes sense. 5 minutes too, Eileen says. All right. Awesome. I just want to see it for myself, actually, see if we can get something in here. Yeah, so you've got some stuff working with already here, right? Into that stretch high. Could be, and again, I don't really like stressing these guys on real near-term charts because a lot of people will tend to run with this a little bit too aggressively. This is only a 1 minute chart, so take it for what it's worth, but could be a near-term head and shoulders pattern here, which would give you a measured move, basically about to trendline support if we just take a quick measured move here. Oops. Into 266.50. Right around here, right above this region, would be the measured move if this is indeed a head and shoulders formation break on the near term, real near term. But Eileen, you get the picture. As far as triggers are concerned, off the high in price, this is one trigger you'd be looking at. And also take note, near term, what's going on? You're getting some divergence. Okay, price action making a lower low, lower low, lower low, higher low, higher low. This gives you a nice support trigger on a break lower. Wouldn't necessarily be looking to chase this too far. Your stop would have to be against a high, but on a topside breach against that low might be a decent play. Okay, so just keep that in mind. If he breaks up 68.40, 68.39, I wouldn't really be looking for a long exposure until we get back into like 66.50 regions. Make sense? Mustafa, great to see you. Eileen says, cool, I see it. Thanks. You're more than welcome, Eileen. Great questions. Great questions. And that's the play. One other thing I like to do on the 1 minute real quick if I'm on intraday is just tack on a quick retracement. The 618 comes in at 68.12. So first area, look for some support, and then a break below that, you kind of give up. You'd look for the measured move, which takes into 66.50. So quick look there on Euro Key. As always, guys, if you have any questions or trade setup or you'd like to see any of these charts later on, feel free to click on that camera button in the top right-hand corner of your screen. All right, that's Euro Key. If there's no other questions on this, we'll move right along. The other pair that we talked about last night was Euro Dollar. Obviously, very popular about what's going on right now. This thing is poised where it returned or where it reversed off of earlier in the month. We talked about this yesterday. I don't want to waste any more time going over that. 107.30, 107.24, big region of support. You're kind of looking for this opening range break to the upside to favor continued strength in the euro, specifically because this bottomed right here, which is an exact 100% extension, screams correction, which means more medium-term slope remains up to the upside. Here's what euro dollar looks like first on the daily. Okay, you can see that we probed right through, came again at that 109.24 level, 25 level. If you guys recall the scalp report from last week, we were denoting that as the bearish invalidation level, and it continues to remain that same level, guys. So we need to clear 109.25 on a closed basis to continue favoring the upside. Such a scenario, you're looking at the 100-day moving average, the 200-day moving average, former trendline support, now resistance, and the key 618 of the October decline comes in at 111.20. Okay, I know that swing trades, if you're following on Jamie's side of things, that position that you're in on the long side for the euro, you guys are looking for 112. And certainly a top side break there, you're looking at the October open, which came in right below 112, 111.74. So the levels are pretty good. I just want to caution everyone before getting too aggressive on the long side, we really need to clear this on a closed basis. Such a critical level. Again, this is December high day reversal close that we made here on the 15th. And you can see some really nice action along that same threshold. Add to that, you have basic trendline support off the highs, which continues to close this or keep it capped on a closed basis. Euro dollar on the near term last night looked like this. Possible pitchfork that's in play. We don't have enough touches to really confirm, but it keeps the focus higher while above this median line. And it highlights 109 resistance, and there's that 109.30, 109.25 level key resistance that we filled at earlier in the week. Here's what the scalp looked like, and here's what we look like now. So we did take out that target at 109.05, and we even went right into the 109.30 target, and that's where this thing turned over more abruptly. Constructive above 108.68 at this point, trendline support. Okay, again, we'd be looking for longs. Eileen, on a trade like this, a pull lower, a stop against, again, the European open low here would be the most ideal way to play this one. And the only thing that would invalidate the long side of the trade, guys, would be just a basic break of that trendline support off the yearly low. As I noted earlier, Euro key made a break of its objective weekly opening range high, right? Much more significant. Euro dollar has failed to do that. All it did last night was try to attempt to run at the highs and failed. On a longer scope, and I know this is going to look messy at home, guys, just bear with me. Just want to show you one thing. I think Jamie tweeted this chart earlier today, but if you look at longer term, this median line formation, a sliding parallel of that same slope, a bisector of that upper quadrant, trendline resistance comes right into the highs where we stopped today. All right, so levels are pretty clear. Again, we're going to bring up our near-term focus will remain constructive all above 108.69. And again, topside levels are unchanged. So if we do get a nice long trigger here against that low, 109.05, 109.30, 618 extension comes in at 109.65. Can you also go into the 5-minute on euro dollar to watch? Sure can. Let's do that. Guys, if you find these drills helpful as far as getting into the 1-minute chart for the scalps, feel free. Feel free to ask. We'll be more than happy to take a look. Here's the U.S. opening range so far. That's what you're looking at right here. You did get some divergence into that low. Okay, this is actually a good drill right here. You got some divergence into that low, followed by a trigger break to the upside, putting you long here. Now the trade kind of is losing steam. You would have inevitably gotten, wouldn't even hit the quarter of the ATR. Yeah, the only thing I don't like about this, Eileen, is there's not much of a long trigger I can work with. Let me just see what this looks like if we take a high off the price. Yeah, I really wouldn't stress that. So I guess the momentum signature here is not going to be as clear, Eileen, on the euro dollar from where we are position-wise. I think if you get a drop lower again into U.S. trade, you find that support somewhere near that 108.60 level, that might offer you another trigger to the upside. But as it stands right now, The only thing you'd be looking at is just the opening range for US trades, really tight. So if you see the opening range break to the upside at 9:30, 10 o'clock, long against the lows, just keep in mind that the broader daily chart, this is really a key level. We haven't been able to close above it all year long. I mean, we're only in the 14th day of the year, but still. All right. Well, good to know that too, if no triggers. And that's something that we don't talk about enough here, guys. We talk about the levels, the bias. Doesn't mean they're always going to play out. If there's no trigger there and we miss the trade, we miss the trade. We got to stay disciplined. If we go ahead and start chasing all the levels on all the scalps, will be a quick way to make a mess of things. Mustafa says, good morning. How about the Aussie US dollar? We'll take a look at Aussie for sure. Mustafa, great to see you. Any other questions on euro dollar before we move off? Got one more pair to cover, Mustafa, and then we'll jump into the questions. Okay, last but not least is euro pound. Yes, that's right. I said it, euro pound. The grandpa trade has come back into focus. Look, it's a really tight ATR. As I said in the video yesterday, they're sterling pips, so they do hold more weight. But I just wanted to highlight this was such a critical resistance range. And I do think that there is a very big potential for this thing still to fake out some people. Okay? First things first, you're looking at the 100% extension of the wider advance off that July low. Less important, but nonetheless there, you're looking at the 2618 extension of just the advance off that first leg up from July. And more so than those two, the upper median line parallel of the formation off of last year's lows. You saw that slope carry the highs, pivot at the median line, hold the lows, and there we are again. So the immediate risk was for a downside push off this. You got a couple of days where you got some kickbacks. In overnight trade, you saw this thing try to break through the highs. It came right into trendline resistance and backed right down. So the close today is critical, and if we do close above it, I'm still favoring the long side, looking for 63.32, which is a basic 38.2 retracement of the decline off of that 2014 high. Oh, excuse me, 2013 high. All right, and this is what we were looking at yesterday for that stretch. The scalp was very interesting because this formation you've been holding has been extremely, exceptionally clean. Let me just zoom that out for you. Okay, you can see how many times we've pivoted along that, a sliding parallel extending off that little high early in December. Also, same slope has been carrying rather well. Here's the break. The objective break, guys, of the weekly opening range. First target at 75.90. Upper median line parallel is already out. So you're right back at support. Again, from an objective standpoint, you want to hold constructive above 75.40 here near term. So I'm looking for long triggers. There's not really much in momentum. Let's see if we can get something here. And the momentum signature, even on the 1 minute, looks pretty constructive still. Okay, so again, price action making lower lows. You see the oscillator making higher lows. And specifically now that we're starting to hold 40 support, you'd be looking for a long trigger here to get you another position, trying to reach for that 71.60. Near term, we're going to bring the bullish invalidation level up to 74.82, which was that swing high from Friday of last week or Thursday of last week. Coincides very well with that sliding parallel we were just looking at. And a break below that, you'd expect to see a little bit more of a deeper correction towards the lower median line parallel, 74.15. So use some caution here. So base case scenario is kind of you get a little bit more of a dip, maybe even a check of that median line before you move higher, but the trade remains constructive while above that sliding parallel. Eileen with a big haha, everything has its day, looking at the grandpa trade. Yeah, I mean, I'm not really typically a big player for euro pound, but again, if seashells are trading on the market and they have a clear directional pattern, I'd be more than happy to trade that. So don't stress these retracements anymore. This doesn't really take into account the new high. If we do stretch it into the new high, we don't know this is a high, but if we do, 74.58 comes into focus. And there it is, that 236. I already moved it here. So the BOE interest rate decision this morning didn't really yield much volatility, as interesting as it was. So we'll have to take that at its face value. It says the bank faces stiffer capital rules in Basel market risks overhaul. The BOE also is saying things that market risk comprise less than 10% of RWS under Basel rules. Bank of England vote was 8-1, and that's really what the major thing was. You saw them talk a lot about the fact that inflation is likely to stay at 1% or sub 1% through 2016, but it's transitory. Okay, since they've made that comment, look what's happened to the pound. Euro pound rallying is all pound weakness. So going into today's BOE interest rate decision, the risk was for them to start saying, hey, maybe we'll achieve above 1% ahead of schedule, since depreciation in the sterling is sort of like free easing for them, right? That's what all these countries are trying to do. Depreciating your domestic currency makes you much more competitive globally. So they're getting that sort of gift for them as the U.S. continues to move higher interest rates. That's only going to exacerbate sterling weakness, which is going to help the BOE eventually help them attain their inflation target. We didn't hear any of those comments, long story short, guys. So is it still an 8-1 count? There was no dissenters aside from that same count that we got last month. So you saw that topside push. And as far as the British pound is concerned versus the US dollar, I know that Jamie's been talking to you guys about that multi-year trendline support, right? We looked at that yesterday here in the webinar as well. You don't have it here on market scope, but you continue to hold those lows. I do not want to advocate trying to take a position on the long side here just yet. Why? Momentum's an oversold, and this is when the market has the most push behind it. If it were to recover back into the 30 territory, that would give me a little bit more conviction. Other than that, you know, you're at risk for another couple of levels lower here. So not a scalp I'm interested in from the start of the week. It's been very messy. It does give you a decent range, but the levels just haven't been clear. So not really interested in scalping sterling dollar. I am interested in scalping sterling kiwi, and that's what I want to talk about from earlier in the week. So sterling key, here's what we look like. This was on the 12th. We had just started the week at key resistance, 223.18, 223.20. I'll show you that in a daily chart in a moment. It was really a big region. We got an objective break of the weekly opening range low, shifting the focus lower. Okay, we're looking for targets at 219.14 and 218.16. Sterling key on the day looks like this. That was that key resistance range we talked about. 618 extension from the decline off of the September highs, a 50% retracement of the advance off of the April lows. Really clean. Here's what the scalp look like. So, $219, excuse me, 219.15. That 50% retracement was essentially what called the low here, okay? And it slopes basically from that descending slope. If you extend it off the Thursday high from last week, you saw that actually caught the lows as well. Didn't get another dip into here, but long story short, it probed above the weekly high and failed. So near term, I'm completely neutral on sterling key as it stands right now. If you put a gun to my head, I'd still like the long side, and I'd tell you to buy it. But that being said, as it stands right now, I still think you can get a move lower before you continue higher. It's just a weekly opening range that's set, failed at the highs, and you're right back in the weekly opening range. So I'd like to stay constructive on the trade above 2-1 221.70, but I am expecting a near-term pullback here. And again, you are getting some divergence, just like you are in all of these pairs that we've talked about today. Price action pressing into a new high, oscillator making a lower high. One trigger is already given out. Here's what we'll be looking at heading into US trade. Again, a much wider range ATR, guys. More than 200 pips on a daily basis. Any questions on Sterling Key? Look for that consolidation break in momentum. Longs are favored above 221.70. Sure can. Sterling Key, Sterling Key. Okay, nothing on the short side there. Okay, so here's a couple things to look for, Eileen. Ready? You saw that the momentum signature since the lows that you made in Europe not last night, the night before, or yesterday, let's say, momentum has held 40 on every bounce. 40, 60 break, 40, 60 break, 40, 70 break. That's very constructive. So you do want to wait for pullbacks to get long. This is a decent, viable trigger I'd be looking at for sure. Look for price to come into a little bit more of a support barrier down to 222.62 would be a great, I think, sort of area to start looking for some support. On a bump back higher, look to play against that low for a stretch into 24.17. That's a soft target we just missed last night. Major key level doesn't come till 225.70, and that's the 50% of the broader move. And one other thing, guys, now that we've made a concrete high and low, one other thing that we might want to take into consideration is just a basic extension off the low. Let's see what that looks like. Not bad. 224.20 comes in at that soft target that we had noted anyway. The 100% extension, if this is just a correction higher, 227.33 coincides with that channel resistance. Oh, what's that? Early next week? Into the close of this week. All right. Eileen, does that help? Questions on Sterling Key, guys, before we move off? Would like to know your thoughts on oil, says Tim. Sure, we'll take a look at oil. Why not? And we might as well look at gold, too, as we're looking at that. Commodities are definitely making headlines these days. And the stop below the Asia low, well, ideally, if we get a pullback a little bit deeper here, Eileen, the stop would be against it would have to be against the Asia low to be a concrete conviction stop. You would say a swing low here in Europe, you could probably press at 222 essentially. But the more prudent move would to try to be get a stop or an entry about 60 pips off of this low. And that's how I always approach these trades, guys. Where's the invalidation level? What's my target? Can I put a 61 stop against this level? If you can't, it's not a trade that we should be looking at. If we can, we're just waiting for the trigger, and as soon as it gives out, we're in that position. Eileen says, okay, I see it. Thanks. You're more than welcome. More than welcome. All right. Let's jump into some of the questions of the pairs you guys want to look at. One last thing on the Euro crosses, since we've gone over essentially all of them. Just want to take a moment to talk about Euro Aussie. This was a trade that we were very heavily engaged in early in the week. I just want to highlight, guys, that the same levels are still in play. Key resistance 158 to 158.57. Key support 152.16 to 152.90. Really clear range that we need to get out of before we start making any larger moves here in Euro Oz. Also a range of 215 pips on a daily basis, so a much larger ATR. And aside from, or unlike Euro Key or Euro Pound, this has failed to open or break the weekly high, just like Euro Dollar has. So it puts further emphasis on treating this as a range near term. You're testing support right now at 53.34, 53.40. Or excuse me, 56.34, 56.40. Divergence into the highs. Trigger break. I think we're late on this one. It's already on its way. And here's what Euro Aussie looked like earlier in the week. Okay, so we're just playing that the decline off the highs, that key resistance when we opened up the week. Again, we highlighted just like we did in Euro Key. The downside plays took out all these targets into 53.44, where it held. Again, divergence into that low, trigger break to the upside, shift to the focus right back to the highs, and that's what we're holding right now. So treat it as a range until we clear either above 58 or sub 53.40, 53.50. All right, so those are all the euro crosses that I've been following. Euro yen is just not on the menu for me right now, so we'll leave that out. Looking for longs here then on Euro Oz. So no. This is the first support barrier, right? This is the range, Eileen, right here. This is the range. The ideal short entry would have been against the weekly high. This would be the first target. You could see a bounce here, but the bias remains benign because you never made a weekly opening range break, and even the daily chart has us sitting in a pretty wide range. So your best bet on a trade like this, Eileen, is to sell closer to resistance and buy closer to support. That's it. I wouldn't really be looking to play these interior levels too tightly. It's a big ATR. Minot says, update on Aussie yen. I did short yesterday for a good run, but got out early at 82 when the lower line was reached. Yeah, let's give a quick update on Aussie yen. Here's what we look like on the 12th. Oops. Where art thou, Aussie yen? There you go. Here's what we look like on the 12th. We were talking about this, which had a very clear weekly opening range just above key support at 80.90, which was an exact 1618 extension off the highs. A break of the weekly opening range, we were looking for a target of 83.67. So, excuse me, we did talk about this yesterday. So you did get a rally that turned just shy of that 83.67 level. The high was 83.38. And now we've made a downside break of the slope. Here's the thing with this. I would tell you the same thing. And again, Minho, I haven't traded Aussie yen since early in the week. But here's what I can say about this. I would treat this the same way that we just talked about with Euro Oz. Okay? Objectively speaking, you made an opening range. You tried to break the highs. It failed. We made an attempt at the lows for the range of the week. It failed. Right now, you got to treat this as just a weekly range. It's Thursday. If the opening range wasn't going to give you a definitive break by now, you can't look for that strategy necessarily to give you a definitive bias. So for me, actually, it's worth cleaning this up a little bit. 50 will leave. 618 hasn't offered many pivots. 88.6 will leave. And we'll go ahead and kill that too. Yeah, you want to stay bearish. There's no change here. So you want to just stay bearish below that resistance region that we highlighted early in the week, 83.68, 83.66. This was a big support. We're going to consolidate here for a while. Wouldn't be surprised to make it back up into here, but broader bias remains weighted to the downside below 83.68. A downside break of the lows at 88.90, you're looking for that key retracement at 80.16. That dates way back to the lows from 2008. All right. Minho, does that help on Aussie yen? You got out too early at 82, is saying? Yeah. I mean, I don't blame you on this one. The only thing I would just continue to say is just watch your levels that you're playing at. Minho, if you're taking it on a scalp basis, 127 pips, right, is what the thing is putting in on a daily basis. So you're looking for about 32 pips per scalp. So we have to make sure we remain disciplined. I got no problem with riding the winners. We definitely want to do that. But on a trade like this, on 82, which was a good target, once you saw this thing continue to break lower, there's nothing in momentum that should have shaken you out. This is where you want to take some off the table, bring your stops down to break even, and let it ride. Let it ride because, break of formation, specifically when you fail at the opening range high for the week, you automatically start to look back towards the opening range low. So Mano, it's always prudent to close out some portion of the trade at the quarterly ATR target. But when you're in a range like this, or if you fail at the opening range high and you're breaking a basic formation we've been watching all week, it's worth it just to keep a little bit on the table. But good move. Good move. Again, divergence, higher high in price, lower high in price, trigger break, beautiful triggers. All right, and that is Aussie yen. Let's jump into your questions now, guys. So Aussie yen was the first one. We got that out of the way. If there are any other questions, feel free to post them on the message board here. Kiwi yen broke the weekly opening range low on this move right here. Support at 75.47 is what I'm looking at. 75.43. It's basically the lows that you made for September. This was a big resistance confluence region. We talked about it earlier in the month. Early in the week. 236 retracement just off that decline. It's also the key 618 off the ascent from September. The median line off the highs, all confluenced right there. Yesterday, you ran right into it and closed lower on the session. That's all the conviction that you need, especially when it's a key region such as what we've been looking at 77.80. So the scalp looks like this. And again, here's what we look like. Earlier in the week. So Kiwi yen, we were holding within the confines of this descending channel formation for quite some time. You saw the top side break there early in the week, go right into the initial target at 77.80, 77.77, which was a huge region that we just looked at on the daily chart. And again, that day closed lower on the session. Just so happens that that decline is now taking out the weekly opening range. And objectively, aside from what I think or what anyone thinks, you want to stay bearish objectively sub 76.35. Now, my only apprehension here is, again, a near-term recovery might be in store back to the median line before we move lower on account of what momentum is doing. This is some pretty radical divergence. In fact, when one of the reference points is above or below the extreme and one is inside the extreme, that also tends to be a strong signal. There's that support break you would need to see to clear that divergence and keep the focus still, or keep the downside bias in play. A breach here and a move back above 73.40, 73.38, essentially the opening range low for the week, and that 786 retracement would shift the focus back up towards the median line. But as long as we stay below this median line, guys, we want to stay bearish. So even if we do tempt long exposure, you'll be looking to wrap that up right around this region. Okay, this median line formation has been offering some nice pivots, so we're going to continue to work with this on the Kiwi yen. Just want to see if that offers any support there. Downside target 74.86 is just a soft target that I was eyeing. More importantly, the lows at 74.46, which we just looked at in the daily chart, is going to be what the major play is here. Keep in mind one thing. This is a basic channel resistance. It's not out of the region of possibility here to see a break, test the support as we're doing right now with some divergence, and then a launch right back into the median line. And again, that's kind of the game plan. It would give us a nice opportunity to try to short against that high, looking lower in price. Minot says, good, thanks, agreed. Could range bound for some while. I think you're talking about the Aussie yen, right? Cheers on that. My pleasure, Minot. Graham says, hi, Michael. Sorry to interrupt. Can you quickly go back to Euro Pound, please? Looking at the 5-minute chart now, 9:20 your time. Do we see a long trigger break for a long scalp with a stop against the barrier at 75.42? Yeah, absolutely. Let's take a quick look, Graham. Looking at the 5-minute chart, 9:20. Okay. Yeah, I see exactly what you're looking at. Stop against support barrier 75.42. Oh, I'm looking at Kiwi. Sorry about that. Or Sterling Key. You're looking at Euro Pound. $9.20. Stop against 75.42. Where's your 75.42 coming from? There's a decent pivot right around 75.45, but I don't have any long triggers that are in play yet for the Euro Pound at least. This is a 1-minute chart. Let me go to a 5 and see if there's anything else on there that you're looking at. Is this what you were looking at? Graham says yes. Okay. It is a 2-point trigger touch. It's hard to explain. Graham, I wouldn't personally work with a trigger like that, just on account of what price action was doing. Typically, I like to use price action where the reference points are either highs or lows in price. These two reference points that you're using are not the highs in price, right? Well, this one is. So if you do something like that, yeah, you can work with something like that. Either way, it hasn't broken yet. This is divergence, right? These 2 points are divergence because price action is actually higher here in momentum than it is here. So taking the triggers off of the high and low in price is always the more prudent thing to do. So on this one, we'd want to adjust it like that. Does that make sense? I saw the divergence. I got too excited, says Graham. Yeah, no worries. No worries. But this is sort of what you'd want to use to keep your limited. I always put triggers on both sides, guys. So if I'm looking for a short trigger, I'll put a resistance trigger on just to know, there's something in momentum that's telling me, you know what, this might not go the way I'm looking for. But as it stands right now, yeah, you haven't even broken that yet. One other thing I'd want to just remind you, Graham, is that the oscillator, any oscillator, whether it's MACD, stochastics, RSI, CCI, whatever you're looking at, they're all based on the closing price for that candle. So if you're looking at a 5-minute chart and you want to get validation of a trigger break, you actually need to wait for that candle to close, which is why for me, I'll typically look really deep into the 1-minute charts, just because you'll get those candle closes more often. You'll get a little bit more of a concrete read right off the bat. Obviously, it's going to be less significant because you're looking at such near-term price action. But as far as the trigger is concerned, it's one thing you want to be mindful of. A lot of times you'll see a trigger that looks like it's breaking on a 5-minute chart. 3 minutes later, it pulls back. Now you're below. It looks like it never even broke, and you're stuck in a long position. Make sense? Graham says, thanks. Glad I messaged you instead of trading this one. Just got excited by the divergence. Hey, no worries. Remember, Graham, divergence in and of itself is not a trigger, right? We can see divergence keep going for a day, a month, a week before it actually pans out into a position shift. It might be more interesting to swing to the swing side as spreads are too wide for intraday. Farouk, you're talking about Aussie key. That was the other question. Let's take a quick look at that. And then we'll jump in some of the equity indices that Minho was asking about earlier. Aussie Kiwi looks like this on the daily chart. It's been a real mess on the near-term charts, but the breakout today really shifted the focus or cleared a major key level. Our last update on Aussie Kiwi was back on the 10th. And here's what we're looking at on the daily chart. The major key range break that we highlighted was 107.20 into 105.60. It was real critical support. Do you guys remember this? This is the slope that dates back to that 2014 initial January low that has been in play still. We extended that off the low from the October decline, caught this month's decline and this year's decline so far, and the opening range for the month just gave out. So objectively, a break above that 107.20 keeps the topside bias in play. I'm looking for a stretch up into 108.11. That's just a basic 50% retracement of the decline. More importantly, you have that slope resistance of the same operative slope we've been in from last year's highs right there. So I do think you got a little bit further to climb here on Aussie Key to the upside. Also very encouraging is that you did see a very similar setup. Very slight divergence, but divergence nonetheless. You're bringing it into a line chart. Excuse me. Yeah, they're about the equal low. I take that back. You made a higher low in the oscillator, but no extreme in price. So that's not divergence. If this had made a lower low and this had made equal lows, that's divergence. Remember, the extreme needs to happen in price, not in momentum. And price didn't make a new low. So that wouldn't have shifted anything aside from it being a key support level. But this breach is big. Look for that run into 108.11. Here's what it looks like on the near-term chart. One of the reasons I have been wanting to really advocate you guys playing this is just because you can see it's real chop. It's been a chop fest since the start of the week. It's only got a 21 pip ATR, so you really don't have that much luxury of not pinpointing a concrete entry. But this was big. We highlighted early in the week. This was huge. So look for that 108.10, just higher. Okay, you stay constructive above 107.20, the weekly opening range high, and key resistance. A break below that takes you out of the long side, although you'll want to look for new short triggers on that, or new long triggers on that breakdown. But just put some things in perspective. Momentum signature since the low we made on Friday, very constructive. 60 break, turn ahead of 40. 60 break, turn ahead of 40. 60 break, struggled, but turned ahead of 40. These are all constructive things. All right. I'd be looking to buy pullbacks into 108.10. 108.10, I wouldn't look to do anything. You're likely to see this thing come back and test the median line at that point if there's not much to keep us up there. But the long story is you want to stay constructive above that 107.20 level. Any questions on Aussie Key? Nice breakout here today. And something Jamie and I have been talking about for the last couple of weeks is just that the losses, it looks like there's more downside for the Kiwi than there is for the Oz. And that should definitely be a supportive factor for Aussie Key. All right, DAX and FTSE 100. Let's jump into those. This question for Aussie Key was for Munho. Let me know if you have any other questions on that, my friend. As far as the equity indices are concerned, here's what the DAX looks like. German 30. Okay. So you're pretty much flat on the session after you saw some really steep losses. I was looking for this drop to come into 9,564. We bottomed at 9,614. So we just missed that region. This is huge, by the way. If you take a look at this, this is the low day close for 2015, the close that we made specifically on the 29th of September. This is the 100% extension from the decline off the November highs. So real nice confluence support. We haven't quite probed that deep. Key resistance and bearish invalidation is still this region here at 10,115, 10,000. 10,000. Yeah, 10,115, 10,168. FTSE 100. I haven't looked at that in quite some time, but doesn't mean we can't. Let's take a quick look. Here's the yearly open. I got you, Tim. No worries, man. Okay, a little bit more of a trigger break here, in my opinion. You made an outside reversal day yesterday that took you right into that median line and turned right ahead, closed well below the previous lows for the year. On this recovery, I'd like to stay bearish sub 5,921. This is really the major support you want to look for, guys, on the UK 100. My favorite, my favorite types of overlaps. So 1618 extension off the high, 38.2 retracement off the low. And this goes way back again to the 2008 lows, I think, if I'm not mistaken. Yep, 2009 lows. So nice confluence region of support there, right around 5,725, 5,740. As far as oil is concerned, here's what U.S. oil looks like. I don't have any major key support down here for where it's holding. I was looking for this decline to kind of come into the median line and give us a little bit of a bounce. The only thing I'll mark here is this. If we make it back above 30, what is that, 31, 38, I do think you see another climb into that 34 region, which is going to be just a basic 50%. It also coincides with the median lines and this sliding parallel that we've been working off of since the August and October highs. So I have more conviction on the formation here necessarily than just any fib levels per se. That said, 34.13, 34, 35.13, this is what's going to use as our near-term bearish invalidation level. But even if we get up into that region, might be a decent short. It's the yearly open. Again, this objectively might actually be a decent trigger for a long scalp in crude, specifically if price makes it back above 31.35 on a closed basis and the momentum signature mounts 30 on a closed basis. That actually might be the onset of a decent relief rally. Remember, as long as it stays sub 40 or sub 30 rather, I'm not touching it. That just means there's that much push. To push the oscillator into that level means there's a lot of selling pressure. If we pop back through 30 and make it through yesterday's highs, I think you get the recovery. Even then, you'd only be looking to play this into the median line and start looking for short triggers yet again. Tim, does that make sense on oil, man? He says, great, thanks, Say, you're more than welcome. Love the enthusiasm. Mustafa, Aussie dollar, quickly, please. Oh, we didn't go over Aussie. Here's Aussie real quick before we wrap things up. That came into a big level, essentially the yearly low at 69.06. Today's low was 69.09. We missed it by 3 pips, but big region. On this trade, the bearish invalidation level hasn't changed. 70.37, the former 100% off the high. More importantly, the median line off the high also coincides on that region. Here's what Aussie looks like on the 30-minute chart. And again, it's very similar to the other Aussie crosses where you made an attempt at a break above the weekly opening range high. It failed. Divergence on that move, price action making a higher high on a closed basis, the oscillator making a lower high. And this was actually the cleanest trigger that we looked at today. Obviously, I didn't take this because this was during yesterday's webinar as we kind of were peaking up there. But you can see that break, divergence into a trigger break, shifting the bias to the downside. We tried to break through the weekly opening range low. It held. Again, divergence into the lows. Ugly trigger break, whether you attached these 2 points or whether you marked, if my computer doesn't want to freeze, whether you marked these 2 points or whether you marked these 2 points, both of them have been a trigger break after some divergence, and those are can be pretty strong signals. So look for near-term resistance again at 69.72. This 618 holds no meaning anymore because we've made a new low, but you can see the clear-cut pivot in price. Caught the highs here in Asia last night, caught the lows here in US yesterday. Just for reference sake, I am going to shift this to see what it looks like. Yeah, we'll work with that 38 too and get rid of that 50 for now. Better pivots on that 38, better pivots on that 618. Near-term resistance 69.60, break, look for that 90 run. Okay, Aussie Kiwi DAX, we got Aussie dollar, we got FTSE 100, we got oil, we got gold. Real quick, here's what gold looks like. Hey, Mustafa, you're more than welcome. He says, thanks, man. Appreciate that. Here's a quick look at gold, guys. Just want to make sure we're all on the same page here. It looks like it's trying to make a break below that median line formation we were looking at yesterday. And I'll have to see today's close. It's interesting because, while we're looking for that rally into 111 still, 111.16, 111.18, the bearish or the bullish rather invalidation is still at 1080, 1081. So I don't want to necessarily call this, the rally over just yet. As long as you stay above 1080, I think that you still have a chance at making a more concerted run to the upside. So please, guys, use some caution here. I really think 116, 118 is a big, big region. So if you are involved in the future side of trading gold, or if you're trading gold on the CFD over offshore, make sure you watch that 1080 level before you get too excited on the short side. There's just too much bearish sentiment out there for me to get comfortable, on that side of the trade, and we're still holding above 1080. So watch that median line formation. It's been giving us quite some good guidance over the last couple of months, and right now you're testing median line support. So we'll look to see if we can see a bounce here in gold today. All right, over on time as usual. But guys, if there are no other questions, we'll go ahead and wrap things up here. We'll be back on Monday morning on Daily FX for the public webinar. I know those rooms are really, really filled, guys, and I don't really get to go into much detail, but it's a good way just for us to kind of wet our beak early in the week, get our sights on what setups we'll be looking at. We'll be back here on SB Tuesday, Wednesday, and Thursday at 8:30 Eastern. Best of luck trading. Keep it light into the weekend. Watch tomorrow's retail sales report, guys. Likely to be a doozy, specifically with the dollar where it is. If you get a dismal print on the back of all the trauma and turmoil we're seeing in Asia, it's going to be a very difficult bid for the dollar, for the Fed to justify moving on rates. And if we do see an interruption or a kickback of those expectations, look for this pullback to find some support near that lower median line parallel. All right, Eileen, Tim, Premendra, I appreciate your comments very much. You guys have a great weekend, and we'll see you next week. Cheers.